This is the Royal Financial Investment Group. As always, this is your host here, Prince Dax. Going over today's topic, bank rates versus stock dividends. Bank rate versus stock dividends. But before we jump into the topic, don't forget to like, subscribe, comment, share, all of the good stuff. Give me a thumbs up, thumbs down. But leave me some feedback. Let's have a discussion. Got any questions, concerns? Give me some feedback. We can talk about it. Leave me some comments, and I definitely reply to all my comments. So let's jump straight into the topic because I don't have a lot of time. I definitely know you guys don't have a lot of time. Bank rates versus dividend stocks. So right now what I have here pulled up is bankrate.com. Bankrate.com. This is a site that pretty much it compares like tons of other sites out there that compares rates nationwide, statewide, whatever. So I use this. I pretty much went in here so you guys can see it yourself. I went here to rates and I pulled up savings, the national average, and let's give the database a chance to run the national high. What I'm looking for, the national high of a savings account. So as it goes through its little search, you're saying, Prince, well, why are you pulling this up? Okay, what does this mean? But before I jump into that, right here, you can see the highest right now is about 1.05 and the lowest is 0.05 on a money market account and a savings account. The reason why I pulled that up is that to prove my point, not to prove my point, but to reiterate the point of there's no way around investing. And you have to look at inflation. The dollar loses value every day. You remember 10, 15 years ago when you used to be able to take $1 and take it to a vending machine and put it in the vending machine, and you used to be able to get 2-3 things out of the vending machine. Now you take $1 to a vending machine and it laughs at you, right? And that's because the price of things are going up. You know, gas, oil, everything, the price of everything is going up. So with that, if the price of everything is going up, that means your money can purchase less. So unless you're investing to beat inflation, you're losing money. Take it to another point of, $10,000 today doesn't have the power that $10,000 10 or 15 years ago has. And that's because of inflation. You used to be able to do a whole lot more with $10,000 10 years ago, or, than you're able to do now. And, we all have the grandpa and the grandma that sit down and say, I remember what a Coca-Cola used to cost 5 cents. And we're like, wow, a Coca-Cola costs 5 cents? Yes, it did. But now look what a Coca-Cola costs, over $1 in most cases. And that's because of inflation. The price of everything goes up, right? So the point I'm trying to make is that if you put your money in a savings account, like you said, the national high right now is 0.05 on a money market or a savings account. You put your money in a money market or savings account, you're gaining 1.05. Let's say the national high. Let's say you get a national high or 1.05. What is the inflation rate? 3 to 4%. So if inflation is going up by 3 to 4% and you're only making 1%, you're actually losing 2 to 3% annually through inflation. Your money is not able to keep up with inflation. So you're saying, wow, I never thought about that. So your savings account is actually losing. Now, don't get me wrong, a savings, checking, and those type of accounts are good if you're going to need your money. But let's say if you say, hey, I have $10, $30, $40, $50,000, I don't know what to do with it. I'm just sitting here. So the thing about it, if you just sit in there, then you're actually losing money because of inflation. Your inability not to keep up with inflation. And historically, it's only one investment option that has historically beat inflation constantly year after year after year, and that stops. And don't take my word for it. That's why most of my videos are tutorials, because I show you the numbers yourselves. You can look at it yourselves. So you look at it here and you're saying, oh wow, I didn't know that. So we're going to take a look at this, right? Now we just seen with a bank rate, the highest is 1.05. We've seen what the highest is. So over here on my next tab, I have eTrade pulled up. For example, I have the stock here, Verizon. And we go down here to this word here that's dividend yield. It's dividend, right? The stock dividend. I can't highlight. Anyway, I just highlight the number there. So we highlight this number here, which is 4.39% on a dividend. Now, for Verizon Wireless is a company that everybody knows. We probably have a Verizon phone, or I'm pretty sure you know somebody with the Verizon. I have Verizon. So this stock right now is paying 4.39%. Yes, the stock is going to go up, down, sideways, all the other good stuff. But guess what? The stock is gaining 4.39%. And what did I say? Your savings account or money market account? 0.05. 0.05 is what they're giving you. The dividend is giving you 0.39. So regardless the stock goes up, down, sideways, guess what? You still get the dividend. When the market tanks the next time, guess what? You still get a dividend check. At least you're able to get a dividend. So you say, hey, I'm not a Verizon fan, I'm a T-Mobile fan. Okay, great. That's alright. Actually, that's even better. 5.58% dividend. 5.5% dividend on the annual basis right now. Now, let's take it, you say, hey, Prince, I got that. You know, that's communication industries. That's not everybody else. Okay, let's look at General Motors. General Motors right now, what are they paying? 4%. We all know General Motors. You probably got it in your garage. I'm pretty sure it's one in a parking lot somewhere. Pretty sure you can't drive to work anywhere without seeing a General Motors product. So it's a company that you already know about. Let's take a look at another company, Ford. We all know what Ford is. 3.83%. That's another one. Let's take a look at, and then, you know, there's some companies out here that pay ridiculous, like a company like this one, PSEC, right? They pay a whopping 12.53%, 12% annually. Let's take another look at, let's say, Apple. Apple, right? 1.63%. So, a lot of companies, these are companies you know of. You heard of Ford, General Motors, Verizon, Nike. Did we look at Nike? Let's take a look at Nike. Let's take a look at Nike. So, let's take a look at Nike. 1.09%. And the thing about it is, also, if you invest into it, then you get that dividend when the stock is doing bad, when it's doing good, when it's just sitting there, you collect a dividend check. Then on top of that, right now, Nike's trading for $102. Let's say if it goes up to, let's say in 10, 15 years, it may be at $150 or $160 or whatever. You make money both ways. So you can make money when the stock goes up, and you're still making money off of a dividend. It's a good way to beat inflation, right? Another thing, I'm trying to think of another company out there. Those are ones that come to the top of my head that we all know about. There's tons of them. Now, I have a video on how to find dividend paying stocks, so you can check that video out. I'll probably put it in the description box as well. But I just want to compare. And you go back and you say, well, you know what, Prince? I won't put my money in the savings account. I will put it in the CD. Cool. Let's see what the CD rate is. CD rate, let's look for the highest national average available for a 1-year CD. We're going to look at this, see what a 1-year CD would pay. What's the national high of a 1-year CD? Now, I just showed you Verizon paying 4%, Apple's paying, not Apple, but T-Mobile's paying 5%, 3%, all these other percent. And we look at it, the highest right now for a CD is 1.35. And think about a CD, the only way your CD can make money is by the interest. That's all you're going to get, 1.35. Stock market goes up, crash, plummets, do anything, that's all you're going to get is that 1.35. At least with the stocks. If the stocks go up, they do great. And guess what? You get to make a little money too, right? So I just want to throw that out there. I don't want to beat a dead horse. Don't forget to like, subscribe, comment, leave some comments below. Let me know what you guys think. And as always, don't forget to watch my other videos. Until the next time, be safe.